Real estate investors have stopped buying houses, guys.
It's time to stop!
That's right, they have stopped buying houses. Remember a year ago, maybe 2 years ago, when they were buying up every single house that they could possibly get their hands on? That's not happening now. Now we're gonna jump into the reason why this is happening, why this is good for you, and what I think is going to happen in the future with these homes that they have previously bought it. But it's looking a little sketchy right now, and it's looking very, very, very tough for these real estate investors who bought these overpriced homes and now they're in a pickle.
Like and subscribe.
So my name is Orlando. Welcome to the channel, guys, and this is some great information. Make sure you hit the like and subscribe button. It really helps out the channel. It says investors are pulling back from the housing market, buying half as many homes as a year ago, Redfin says. These guys bought at the very top peak of the housing market boom when every property was going for so much more, and they thought that they could buy these properties and then resell them back to you at a super, super high price. So you bought at the height of the market and then you turn around and you're trying to sell me the home at a higher price? Nah, we're not doing that.
It's trash.
Then it says home purchases by investors fell 46% in the fourth quarter over the same period last year than before, new reports find. The investors slinking away from the real estate market as home price growth slows and the possibility of price drops appear on the horizon. Now look at that. Remember when I told you guys that real estate investors see what's happening on the horizon, and now we're coming out to see that these real estate investors, now they see the housing market going down? Who said that recently? I can't remember who said that recently, but the housing market is going in a downward direction, correction, crash, whatever people want to call it, but prices are reducing and real estate investors are no different. They understand that if prices go down, then it's not profitable for them. Now, what else is happening, guys? That could make a real estate investor go,
I think I'm gonna sit on the fence. I think I'm going to wait it out like Orlando has been telling everybody. What is this thing? It's this thing called rent.
Remember when we were talking about when I did that video on rent and I was telling you guys, look, rent is going to continue to go down. Well, real estate investors understand this too. They understand that not only are rents going down, but the value of homes are going down. And they're like, that's the death by 1,000 swords. They're not trying to do that. No way am I a real estate investor and my cash flow is about to get destroyed. I'm out. I'm sitting on the sidelines. And rent is going down, guys. I know. Some of you guys are gonna say,
oh, not in my area, Orlando, not in my area.
But if you really look nationally, rent is going down. There are going to be some hot pockets still, but places like Boise, Phoenix, Austin, these places are getting clobbered, guys. They're getting hit so hard because a lot of these areas are having big job losses. I know. The employment numbers come out in their sky and they're still going great. Everything's looking good. But what about these areas like Austin, Boise, these hot areas, these boom town areas where everybody was saying,
this is the next place. If you live here, everything's gonna continue to go up, up, and up.
Oh, that's hot. That's hot.
What about those areas where now we're seeing big tech companies, Walmart, Amazon, all these other places laying off 7, 10, 15, 20,000 workers? What's happening to those individuals? Now we're seeing job losses, we're seeing rent go down, we're seeing values go down in houses. You have to understand that real estate investors, they can't weather that storm. They cannot weather that storm and they won't. So what are investors deciding to do? They're waiting, just like you. Purchase of homes by investors in the U.S. fell 45.8% year over year in the fourth quarter, according to Redfin. It says the last time investor purchases dropped so significantly was in, what? Is this right? 2008? How Could that be it? Imagine the coincidence of the same data being the same as 2008. So it says, during the subprime crisis, when they fell 45.1%, Redfin says. Guys, listen. If you're not soaking up this information and thinking to yourself,
Orlando, I see what's happening here. I see the trend where we're continuing to go down, down, down.
I'm telling you guys, if you're seeing real estate investors or investors in general having a very hard time trying to make these numbers work, it's getting ridiculous. If rents and values are going down, it's a no game for real estate investors. It's no game. And that's from a real estate investor himself. I'm telling you, if I don't see value or cash flow happening with my property, the deal doesn't work. The deal does not work if there's no cash flow.
No.
And with interest rates going up, interest rates are continuing to go up. Right now, for a 30-year fix, what are the numbers? Let's take a look. Right now, a 30-year fixed mortgage is 7.3%. 7.3%. That is high, guys. That is high. But here's the thing. What do you think it would be for a real estate investor, for a commercial property? It's going to be higher, guys. If the mortgage rate for a residential live-in primary residence is 7.3, you have to understand that investment property loans will be high too. They're going to be around that 9% area. Maybe if you're lucky, you could get 8%, but it's still going to be high. And if you cannot make that cash flow work and rents are going down, vacancies are going up, guys. Vacancies are going up. What is that telling you right there? Something wrong in this equation. The government is saying unemployment is the lowest it has ever been, that the regular American is making the most money that they have ever made. Come on, man! But yet, we're having tons of vacancies. No one can buy a house, and 68% of people are living paycheck to paycheck. Now I want to talk about what investors are waiting for, and this is the reason why I tell you have to sit on the sidelines with a purpose. It's because not only will you be just waiting on the sidelines, but investors will be sitting on the sidelines now waiting with you guys also. And so you have to know your market. You have to know exactly what homes you're going for. You have to have your credit, your down payment, everything together. Because listen to this, the overall drop in mortgage rates and possibly bottom out of home prices may lure investors back into the market, but it is unlikely that investors will return with the same vigor that they had in 2021. So what does that mean? That means that some of these guys will come back, but will it be the same amount of investors pouring into the market? Probably not. So this leaves a huge opportunity for more homes to be available for individuals. Now remember, housing is local. I'm talking on a national scale. I'm not talking about, Phoenix or Austin or Tampa or Orlando in particularly. I'm talking about nationally. But this is so important, guys. Make sure you're sitting on the sidelines with a purpose, and you're not just sitting on the sidelines hoping that a home will fall into your lap, because it won't, guys. You will not get your perfect dream home or a home just in general that's just gonna fall into your lap. You will get the price points and everything that you want. You have to work for it, guys.
Is it possible to learn this power?
And I cannot do that work for you, but I can give you the information you need to stay on top of what's happening in this market. But guys, look at this. Look at this. It says, this is good news for individual buyers who are still grappling with high housing costs, but no longer losing bidding wars after bidding war to investors. Now, remember, this is based on averages across nationwide, but I want to jump in and give you some city data, right? And the city data here is, look at this, guys. Metros with the largest decline of investor purchases in Q4. Las Vegas, 67%. Phoenix, 66%. Atlanta, Georgia, 62%. Charlotte, 61%. Jacksonville, Florida, 57%. Nashville, 54%. Now, Orlando, Florida, 51%, guys. That's crazy. Now, look at this data. It's showing you exactly why these guys are running running from these hot areas. These prices are going down, rents are going down, vacancies are going up. You see it right here. Now, guys, this is the reason why this stuff is so important, is because there is a big wave of defaults that are really hitting investors really hard. And this is the reason why a lot of investors have just stopped investing. Not only is lending getting tough, not only are underwriting criteria getting tough, not only are rents going down and values of properties going down, vacancies going up. Now, I know what a lot of you guys said. Well,
Good for them. They shouldn't have bought so many homes.
and yeah, you're right. But I'm trying to explain to you the reason why investors are deciding to push on the brakes now and deciding not to buy. It's not just because values are going down. It's because there are a stem of issues going on right now. Right now, we're starting to see a bunch of defaults that are happening with the commercial mortgage space. It is just tons of defaults. And I know what you're thinking. You're thinking like, Orlando, what are you talking about, man? I haven't seen any defaults. Well, let me show you. It shows here, this one company, Vertatus. I probably chopped that name up, but hey, look, they are in default for $450 million. You're like, okay, Orlando, that's just one. Well, let's go on to the next. Dumont Property defaults on a $103 million loan. Yeah, not looking so good. NYC building owners face $16 billion. $16 billion. At first, we were just talking, what were we talking about earlier, guys? We were talking about 430 or 50 million. Now we're in 16 billion in CMBS loan due in 2023. That's a lot of loans. And now, guys, listen to this. Listen to me. What's going to happen to these guys once they try to refinance their loans? And then once they refinance their loans, they realize,
Whoa, rates are higher. What's going on?
or once they do a appraisal on their property and values have went down because vacancy is higher. Because you have to realize, guys, when it comes to commercial real estate, the value is based off of cash flow. And if the cash flow has went down, the value drops.
Do you believe me yet?
And I can promise you, a lot of these properties are in this position. So what are the two things that you can do to save yourself? Well, you have to come up with money that these guys probably don't have, or you have to go into default. And that's the way it's looking for a lot of these commercial owners. They're gonna let their loans in the billions go into default, and it's going to start a domino effect, guys. A domino effect that you guys didn't see coming, but you heard it here first. Then we have another property. Brookfield defaults 2 Los Angeles office towers, defaulting on a loan rather than refinancing debt as demand of office space weakens. I just said that. Look, guys, look, I know this space like the back of my hand, guys. I really do. But here's the thing. A lot of these guys are thinking to themselves,
Is it cheaper for me just to let the property go rather than continuing to find money for it, strip myself dry of all my liquidity? Or is it better just to let the property go into default?
and you have to remember, guys, a lot of these loans are non-recourse loans. What does that mean? That means that once the loan goes into default, or they foreclosing, they can't come after the individually personally. So for them, it's just a business decision to give it back to the bank. Now the bank is sitting with what's the default on this one? The default on this one is $1 billion. So they're gonna give away a $1 billion asset, or it was once worth $1 billion, but it is not now worth $1 billion because the vacancy is so high on office buildings right now, guys. So what is my point? I went onto this commercial real estate. I love commercial real estate, guys. I really do. But here's the thing. The point is that it's gonna start at the top and it's gonna rumble all the way down. These guys are buying these single family homes, and in their way, they're trying to treat it like it's commercial real estate. They care about the cash flow and the cash flow only, and the cash flow is going to bite them in the butt because rents, vacancies, job losses, all of this stuff is piling on. And now these guys, the BlackRocks, the Blackstones, all these guys who bought all of these homes are now thinking to themselves,
Did I make the right decision buying all these homes? at an overpriced value, thinking I can rent out to people and they were gonna continue to pay higher and higher rents.
Now they're thinking to themselves, it may be better if I could just offload these properties and sell them back at a cheaper price at a loss, rather than going into a situation where they may have to file bankruptcy or just let the properties go at a huge loss. Once again, guys, you won't get all of your value from this one video. Please make sure you watch this video here. It will definitely help you learn about the financial markets, the housing market, get into your first rental property. The information you will get from it will be gold, I promise you. I'll see you in the next one. Thanks.